Hello and welcome to yet another presentation and video from GJ Management Consultants. So today we are here to present about financial planning and analysis. So as a continuous endeavor to make sure that we should provide our uh, viewers and our subscribers to the best of the understanding. So we are here to present the last topic in the finance processes, that is financial planning and analysis. So we already had covered O2C, P2P, R2R, and this is the final leg in the entire finance processes, which is financial planning and analysis. So we are going to cover again each of the sub process within the financial planning and analysis, the core KPIs that are required to ensure the efficacy, effectiveness, and timeliness of the process. And then we're also going to have a look at how the CFO dashboard looks like. So that at a CFO level, what he needs to monitor when he's analyzing financial planning and analysis as a function. So let's just move to the first slide and see what do we have. Okay, so let's just start the presentation then. So what do we have? 8 zones. So which means that our entire FP&A process has been bifurcated into 8 zones, and we do have various sub processes within those 8 zones, and we are going to look at each of all those sub process. Then we are going to have understanding on the key KPIs at the sub process level, and then we also look at it the KPI at the process level itself, and then we are going to have a look at the information or the kind of insights that CFO wants to have a look, so that he can understand that or he could analyze and visualize that everything within the company at FP&A level is working smooth. So let's just move to the first one then. Okay, so we do have a first sub process within FP&A strategic planning. Okay, and what is it that we're going to cover here? Okay, so strategic planning, and then we had 3 to 5 strategic plan preparation. Okay, so strategic planning is one of the core FP&A process. So which means that that company create the plan for the future. It create the strategy, and then how that strategy needs to be implemented, needs to be taken care of. So typically, a strategic planning is also called the long range planning, wherein the company looks at the overall objective of the organization, and this is the resources that they have. They create a plan. That plan is being created. This is the goal of the organization. This is the vision of the organization, and where they want to be in next 3 to 5 years. So that strategic plan is being created to create a kind of a vision for the organization, that what would be their area in which they have to diversify, what would be the area where they have to grow, what are the products they want to diversify, in what segment, in what sector they want to go. So entire vision of organization is being embedded in this strategic plan, and it is one of the crucial part of the financial planning and analysis. Long range financial modeling. Okay, now, long range financial modeling is typically a kind of a modeling which gets created once we have the strategic plan being created. So we have a strategic plan created, and then we do the beta modeling to make sure that some of the key decisions that we are going to take, the impact of those decisions in the overall long range planning. So if let's say we have simulate and we have 4 to 5 condition in our strategic planning, that if this happened, this would be our plan. If this happened, this would be a plan. The data modeling, which is being done with the help of the artificial intelligence, that gives insight to the CFO and the CEO, who would able to visualize that if at all there is some change in the environment, if there's change in the external environment with respect to regulatory environment or statutory environment or any other government bans or government rationing comes, what would be the outcome of those decisions in the overall synergy and overall strategic objective of the organization. So all those scenario modeling is being done as a part of the long range financial model. Scenario planning is again a step which is a bit deep into it. So modeling is typically laying down the very simulation model, and if let's say modeling lays down multiple options, then how we have to cater those options. This is the scenario modeling. So typically see how the flow is happening. So we have to create a strategic plan which typically denotes the vision of an organization. Then basis that we'll create the multiple simulation model of the long range planning, and then long range modeling, And then basis that we have to create a scenario planning of the multiple scenarios basis the scenario modeling that has been done. And then final step in this is the capital investment planning. So typically once we have like a strategy being created, we know the vision, then we have to take a decision our capital and investment planning in the next couple of years or 3 to 5 years. So to make sure that we have first adequate funds to manage the strategy that we have created, and secondly to ensure that the capital investment that we are planning, that should be easily made available, so that we do not have a capital or the investment crunching at the time when we have actually started in implementing our financial plans. So, zone one, which is like a planning zone, which typically deals with the vision and how that vision is going to get created in a form of a document with the multiple scenarios, and then what can be the planning for those scenarios, and finally how our capital and investments has to be taken care of to make sure that our strategic decisions can be implemented without any concerns. Moving to the next sub-process within FP&A, which is the annual operating plan and budgeting. Okay, now since we have created the strategic plan, we are in a position to create a AOP or the budget for that particular year in which we are operating. Because typically our goal that we have created is for 3 to 5 years, and each year we have to achieve a certain percentage of our vision, because vision is a long-term statement. It cannot be something which can be achieved in a year span. So if we have a vision to let's say capture 90% of the market share in a particular product that we are currently selling, then it has to be in a phased manner, and each year we have to create an operating plan to make sure that our vision for that particular year can be achieved. So, annual operating plan or budget is typically budget that will help us to create a budget for the revenue, our revenue, cost, OPEX, CAPEX, and budget. So typically, when we created the budget, we are actually making sure that the limited funds that we have should be used in the judicious way, because we have limited funds and we have to manage our operations within that. And likewise, basis the our planning, what is it that we expected to be the revenue. So we have the clear understanding. Okay, this would be our budgeted revenue. This would be our cost, and this is the OPEX. And then we have a plan which needs to be created basis that annual operating plan or annual operating budget. Driver-based finance modeling. So typically this modeling helps us to understand that because we know that when we are dealing in a kind of a scenario which changes quite often. So we need to create a flexible budgeting here. Driver-based financial modeling is typically a kind of a flexible budgeting concept, wherein we are creating a budget basically variation in one or more factor that is having the direct impact on our cost, revenue, expenses. So we create a kind of flexible basis budgets. This is the driver based modeling. Then we have budget alignment. So once we have created the budget, it needs to be aligned with all the departments within the organization. Various departments have a role to play because each department bases the strategic vision of the organization, create their own budget, and then final budget consolidation needs to be happen. So once it is being done, it has to be aligned with all the stakeholders so that the interest of each of the respective department has been taken care of. And then final approval and the sensitivity analysis. So which means that it has to be get approved, and also sensitivity analysis to confirm that the final budget, how it is impacting and what sense various stakeholders has to this particular budget, whether they are happy, they are satisfied, or they have some concerns. So this will give a quick sense that budget that we have created is actually meeting the need of the organization first. Secondly, it is aligned with the strategic vision that we have created for the organization. And third, that it is meeting the aspiration at each of the department level so that they can give the best in the overall strategic vision of the organization. So moving to the third sub process of financial planning and analysis, forecasting. Okay, this is another and most important sub process of the FP&A. So first is rolling forecast for 12 to 24 months. So typically we need to create a forecast considering the budget that we have created. Now we have to make sure that our forecast should basis on some parameters, some assumptions, some predictions. And in nowadays scenario wherein artificial intelligence in there, it has become very easy to predict. This is the multiple scenarios that we can give to the AI. It can simulate the data in multiple ways and give you the forecasting, which is the best forecasting. This is the parameters and the informations that we have provided. So rolling forecast will give us an intent that basis the current budget, how our revenues are going to be forecasted for next 12 to 24 months. What is the impact of that revenue on my capex and opex? How my capital investments are going to shape up in next 12 to 24 months. So that will all be dependent on the forecast that has been created. Then profit and loss, balance sheet, and cash flow forecasting. So this is the rolling forecast. We also need to create the impact of each element and the attribute on our profit and loss. Balance sheet as such, as to what is the impact of that on our capital investments, or what is the impact on the overall loans and the unsecured commitments that we have agreed with multiple stakeholders, and our cash flow forecasting, whether our working capital requirement is getting managed in the short run, and whether do we have enough cash or enough liquidity to manage our long-term obligations. So all that information is being done as a part of the P&L, balance sheet, and cash flow forecasting. Real-time re-triggers, reforecasting triggered. So as I mentioned that we are living in an environment wherein changes nowadays reality. So which means that we have to make sure that our rolling forecast that's been created, that needs to be re-triggered basis the happening of a event or non-happening of an event. So let's say if we have created a forecast basis an assumption that three or four things are going to happen, and our forecast basis on those assumptions. If those three or four things is not happening, then obviously our forecast is going to get changed. Likewise, if we have assumed that our forecast is happening on, let's say, happening of an event, let's say if we are in a product market and if we have created a product, and if we assume that there is going to be good rainy season in the month of the let's say July and August, but let's say in the month of June we got a prediction that there is going to be very scanty rainfall in the month of July and August, which means that our entire assumption is going wrong, and hence we have to adjust our forecast. So any real-time trigger and real-time factors that is impacting my forecast should be make sure that we are accommodating those and recreating and redefining the numbers for to making sure that our forecasts are more realistic. And then the last one is business partner inputs and alignment. Because again, we are dealing with third party stakeholders, we are dealing with internal stakeholders. So all our partners inputs and alignment should be taken care of, accommodated, and should be given much importance, because their inputs and feedbacks are also required, because they are dependent upon our forecast. So their inputs are required to make sure any changes, any amendments, or any corrections that we need to make in our forecast. So this is the third sub-process within the financial planning and analysis. Let's move to the fourth process then, financial analysis and insights. Okay, since we have now done something which requires some sort of evaluation whether our activities that we have done are correct or not. So what we have to do, we have to do the continuous analysis of the revenue, just to make sure that whether our forecasting revenue and our budgeted revenue are in line. If let's say there's a variation, then we have to, you know, correct our forecast to make sure that we are running smooth to it. Likewise, our cost analysis, because this is again one of the area wherein we have to make sure that it should not be overrun, or if it is overrun, there has to be reason for it, because we have, let's say, may any expenditure which is not planned for. Uh, all those reasons should be evaluated, and concerns should be highlighted. An objective here is to make sure that we are keeping the track of everything that we have done so far, whether it is budgeted, whether it is forecasting, or whether it is any kind of scenario modeling. So we have to make sure that we should not be over budgeting, and we have to make sure that the forecast that we have created should be near to the actuals that is happening. So all these controls needs to be done uh, in an ongoing manner. It's not like we have to wait for a period, then only we can do the course correction. It's an ongoing thing that we have to. Then the KPI dashboard and narratives. This is an area which will help us to understand how we are performing. So we are going to touch more upon the KPI in the upcoming slides. Dashboard gives us narrate, and narratives give us the understanding that how our performance is happening. And then last one is the benchmarking, wherein we are ensuring that whatever we have done, is it like benchmark both internal and external? Are we are heading in the right direction? And if at all some course correction is required, are we implementing the necessary course correction in the early stages? So these are like first four zones, wherein we have completed strategic planning, AOP, which is annual operating plan and budgeting, forecasting, financial analysis and insights. So let's just move to the next four zones. Okay, now we have another four zones. So typically, we have looked at the zones wherein we have a lot of data which we have consumed to create the budget, forecast, modeling, scenario modeling, rolling forecast, and then we also looked at some of the outcomes and compare the data with the actuals just to make sure that we are in line and not deviating. So let's just some of the another sub processes that we have to do in the financial planning and analysis. So zone five, which is the management reporting. Now, this is one of the critical because a critical sub process within the FP&A because it deals with the monthly MIS pack. So we have a lot of the reports that we have to create so to make sure that we are aligned with the objective of the organization and kind of the MIS depend upon the organization to organization, industry to industry. It can be a segment basis MIS, product based MIS. It can be region based MIS. It can be department based MIS. So each MIS has its own relevance and it depends upon the user who is intending to use that MIS. So a lot of the information that we have created, we have the information, we have the comparable numbers for the past trends, we have the comparable number of the forecast budgeted, then our budgeted number was less X, forecasted number changes because of some trend and my budget revised to Y number. This is the flexible budgeting. Now this is my actual. What is the variance between the actual and the budgeted versus actual and the revised budget? So all those kind of the information is required by multiple stakeholders to evaluate their outcomes. So this is the management reporting. Flash reports are the ongoing reports that are required to be shared on the happening of daily reports. These are basically so as in when depends. For example, if it is a revenue, then how my daily revenues is moving. If it is customer acquisition, what is the daily customer acquisition? So all these reports are of much importance to the specific set of the user who want to ensure that they are keeping themselves on a track and they are ensuring that if any variation is there, an action can be taken on immediate basis. CFO narratives are again a compendium of all the outcomes that has been created. The CFO narrative will give it's like a kind of insights, and with the AI now being made available, those insights can also be generated with the AI, and CFO can consume that AI to take the decision on the long range plan. And likewise business segment and vertical analysis to ensure that which segment is working in a profit and which segment is not working in the profit and we need to do some course correction. So all these analysis would be available in the form of the management reporting. Then we have business partnering, which is another sub process where we have to make sure that because in a in a typical organization we are dealing with the multiple stakeholders and we require the business partnering from all the stakeholders. First, we need the input from their side when we are creating the budget, when we are creating the forecast, and when we are creating any kind of the scenario planning. And then also we need their inputs if at all we have some outcomes and we have compared those outcomes, we need to share them with them and we need their inputs so that we can make the necessary course correction in our long range plan. So performance reviews with the business heads, this is most important. Secondly is decision modeling, pricing, discount, etc. So again, one is scenario modeling, wherein we were predicting something based the scenario. This is decision modeling. Once we have the outcomes made available, what we have to take a decision, whether we have to do some pricing decision in terms of price negotiations, or we have to offer some discounts to improve upon ourselves. These are just examples. So there are multiple decisions that can be taken. This is the outcome that has come. Likewise strategic initiative and support. So if at all we need to make some initiative or we need some support from the management if we are deviating from the current objective, what all things that we need to do as a course correction. So all these can be done if we have a proper review mechanism or the governance mechanism to make this happen. And then cost optimization and the recommendation, what can be done to control the cost and what recommendations or what plans or what projects we need to launch so that we can control the cost that can be reduced and we can achieve the efficient ways of working. So this is the sixth the sub process within the financial planning analysis. Next, coming to the next one, then it's capital planning and the investment analysis. So this is basically again an evaluation stage wherein we are evaluating the capex that we have incurred as a part of the long term strategy. What is the total net project value, or what is the internal rate of return, of the payback period, net. So this will help us to net present value, sorry, IRR and the payback. So this will help us to evaluate the efficiency and whether our investment is yielding us the result or not. And if it not, we need to make a course correction and take the necessary steps so that we could able to make our investment profitable. Capital allocation modeling, it's again like allocation of the capital or the investments if we have done in a particular product, particular segment, particular region or particular department, whether it needs the reallocation, whether we need to reallocate our fund more strategically so that we can meet the organization objective. All those decisions need to be taken in this activity of this process. Merger and acquisition financial modeling, so whether we are in a position to do some M&A kind of thing, all depends upon the outcome and the results that we have got out of the performance in the last 6 to 8 months. Then we can take a decision whether we need to do any such. So this is again a strategic decision that needs to be taken organizations, and this is not something which is a repetitive nature. It's depend upon the case to case basis, and when companies are doing some strategic overhaul of the business strategy and they want to do some mergers and acquisition, that is relevant at that point in time. And then we have funding strategy support. So if at all company wants some funding, whether they want funding in a form of the let's say they want to get into an, if let's say company is not listed, they want to get into IPO. If they are already listed, they want to raise some right issue or some qualified investment from some of the strategic investors. So all those decisions will be taken basis the funding strategy support. Then we'll come to the last sub process within FP&A, which is the tools, automation, and governance. That is largely to ensure that we have enough technology available and that technology is being adopted by organization, and who and definitely ownership has been created. For example, in the planning, we have the ENA plan, SAP BPCT. These are like planning tools which help us to create the overall organization plan. So we have to make sure that we are adequately using these tools, so that everyone is using the same tool and the same set of information, and there should be single source of truth for all the people who are using this data. Data governance and quality, this is an important step to make sure that all our data is being governed on the regular basis, and interfaces the basis which we are extracting the information, creating the MIS reporting or any other report, that interfaces should be working fine, and we should be using the same database for all the purpose of reporting rather than multiple database. And if even if we have the multiple databases, those needs to be consolidated at a level so that we can use the single source of truth for all the reporting. Then we have the dashboard automation, making sure that all our dashboards that we use to report that are automated. And then finally, we have the governance. Governance is most important to ensure that we are governing everything in an appropriate manner, and we have control on all set of the activities that we are performing. So these four sub processes, which is the out of the eight processes, these are largely to the outcomes. The first four was basically inputs and how we are processing their outputs, and these are like outcomes driven. So we need to make sure that as a part of the entire FP&A process, we have a data, we have to create a model out of that, we have to create a budget, then forecasting, then we have to do some analytics, and then we have to do the reporting, making sure that all that information comes from the automated system and integrated system, and then finally we have to ensure that there's a strict governance for all those data. With this, we largely come to the end of the sub-process of FP&A. We'll quickly move to the next slide and look at all the KPIs that are required to ensure that our sub-processes are working. Okay, so let's just quickly have a look at all the KPIs of all the sub-process within FP&A. Okay, in planning and budgeting, so budget cycle time, which is like on the timeliness of the budget. Then we have number of budget iteration. This will let us know whether the accuracy and the timeliness or the accuracy of the information that we have in the first place. If we have multiple iteration, which means that the information is not coming in accurate manner in the first place, and we need to take an action so that we can create effective budget in the initial stages itself. Variance between budget and the AOP final, so which means that we have created an annual operating plan. which is a subset of the budget, because budget is the at the head level, and then it is something which is AOP is to be created, and then if there is any variation between the final AOP versus the initial budget, a percentage of budget submitted on time, how many time, what at what time we have submitted the budget versus the time that has been agreed upon, then change Kaplan test, how much budget shift each round. Then we have forecast accuracy. We have revenue forecast accuracy, EBITDA, profit, cash flow, mean absolute percentage error, which means that the error basis error in the forecasting vis-a-vis the actuals, and what is that percentage of error there, forecast bias, optimistic and pessimistic, and then forecast timelines. So again, when we look at the KPIs at each of the sub-process level, largely it's covering three aspects, which is the effectiveness, timeliness, and the accuracy. So again, KPI is just a mechanism to ensure that we are keeping track of all these three aspects or three parameters, and each sub process has a different set of the KPI to do that evaluation. Then analytics, insights and quality, decision ready insights, time to procure executive insights, percentage of insights automated versus manual, unit economy accuracy, and the depth of the variance. Uh, Reporting MIS timelines, MIS accuracy, percentage of number of reporting errors, report automation percentage. So typically, wherever AI or automation or any kind of small quick areas which can be converted into a kind of an automation scenario, and we can avoid the manual, those are also be considered as a part of the KPI, wherein when we talk about the percentage of automation, it's largely taking care of the areas which can be managed without any human touch or human intervention. Business partnering KPI, business satisfaction score, number of finance supported decision per month, turnaround time or ad hoc business request, accuracy of the business case modeling. Then we have capital investment KPI, which is return on investment and return on capital deployed or employed, NPV versus IRR accuracy, capex utilization, working capital forecast, and then capital efficiency score. And then lastly, we have FP&A cost as a percentage of revenue, by which is like operating cost as a percentage of revenue, FT productivity, which is models divided by the report per FTE, automation index, time spent, and then the system utilization rate. So, in a nutshell, like in any KPI which speaks about three different parameters, all these KPIs are designed to confirm the effectiveness, accuracy, and the timeliness of each of these sub-processes. And each of is this is unique, and it has to be again. This is just the, I would say, illustrative. When I say illustrative, largely company do measure the efficacy of the process around these typical KPIs, but it again depend upon industry to industry and company to company. They may have different set of the KPIs to measure the efficacy of the process. However, these are the these are the guided KPIs, which means that these can be used as a guide, and if at all they want to make some amendments in the existing set of the guidelines, they can definitely do that. But these are like overall KPIs for the FP&A. With this, we are going to come to the last slide when we speak about the CFO dashboard. Okay, so at the CFO level, what exactly he want to look at it? Let's just quickly have a look. Executive financial summary, which is top layer, revenue versus plan, which is YTD and full year projection, EBITDA versus plan, cash flow forecast, next 13 weeks, forecast accuracy dashboard. Then at P&L driver dashboard, price volume, mixed waterfall, product and customer profitability, cost movement analysis, cost to serve, OPEX variance, a business partnering dashboard, business satisfaction score, value delivered, ad hoc request, forecasting dashboard, forecast accuracy, a MAPE, which is again mean error at the forecasting level, forecast bias, rolling 12-month forecast view, working capital and cash dashboard, cash conversion cycle, cash flow forecast versus actual, working capital variance, liquidity coverage, and then budgeting and AOP dashboard, budget cycle time, off balance side, budget iteration, variance from the initial budget, capex versus actual, and then budget approval workflow. So, in a nutshell, as a CFO level, he wants to look at the key outcomes at each of the sub process level that is going to impact his decision, and that is going to impact the organization as a whole and has a direct impact on the long term strategic plan. So he has to make sure that all these information should be readily made available to him or her, so that a conscious call can be taken for any kind of intervention that is required. And if at all it requires any kind of intervention within the internal organization by making some course correction, any employee related issues, any process related issues, any technology related issues, so all those course correction can be inbuilt or created as and when required, but he needs to have that information in the form of the CFO. So these are typically close to how many, I think 25 to 30 KPIs or the outcomes that he need to track to make sure that he is having the enough confidence on the financial planning and analytics team. And with that confidence, he can definitely take any action on that. So I think this is largely what we have for today's session in the FP&A. We'll just quickly move to the closing slide then. Okay, so this is the thank you slide. I want to thank all my viewers and subscribers for watching this video till the end. I request all the viewers to please share this video. Please cascade it to all the relevant people within your group so that they can also get understanding on the FP&A process, their sub process, the KPIs, and the CFO dashboard. Uh, Please subscribe our channel, and it's our continuous endeavor to provide these kind of knowledge and disseminate these kind of knowledge to all our viewers. So I think this was the last session in the finance processes. We are going to come up with new series very soon to cover the process on the HRMS side and the SCM side. And we are going to launch another series on the IND AS very soon. So just stay tuned and subscribe our channel and watch more of these video in the coming days. Thank you. Goodbye and have a nice day.